Welcome to yet another episode of Tuesday Technical Talk. Today's topic is trend lines. So what are trend lines? Trend lines are like angular lines which you draw joining the lows or the highs, which will give you dynamic areas of support and resistance. I will show you more examples. Now, what is a good trend line? You can draw so many trend lines. There are so many lows, so many highs, so many swing points. So what is a significant trend line? The significance of a trend line depends on the length. So whether the trend line is for 1 year, or the trend line is for 1 day, or trend line is for few days or few weeks, or for 5 years. So if a 5-day trend line breaks, that means a short-term trend has broken. If a 15-day trend line breaks, or if a 3-month trend line breaks, that means the medium-term trend has broken. And if a 5-year trend line breaks, that means a major trend has broken. So that's the length of the trend line. The second is called the number of time it has been touched. Now you will draw certain trend lines which will keep bouncing from the trend lines. The more it touches the points and then more it bounces, that much significant the trend line is. And when it breaks that trend line, it becomes much more important trend break where you can take a reversal trade. And the last one is the angle. Now you can draw an angle which is 45 degree or less than 45 degree, 70 degree or almost perpendicular, which is 80 degrees. So what are the different trend lines, different angles? So we'll see all of these examples and understand trend lines in a better way. So let's start with this one, as upward sloping. This is like a 45 degree trend line, and you can see these are called the touch points, 1, 2, 3 and 4, right? So 4 touch points and a 45 degree trend line, and let's say this is for 6 months and then it breaks. That will give you a medium term trend change, right? Then there is an angular trend which is like 65, 70 degree, and then you have a very perpendicular thing which is like very sharp rally, and when that trend line breaks, usually the trend goes in consolidation rather than a reversal, right? So when a steep trend line breaks, consolidation. When a shallow trend line breaks, a reversal of the trend. Make sure you take full notes about this program or this video. Let's talk about this. This is a shallow trend line which is lasting for a few years, and how many times it is bouncing. So when you have a major crash like this and you have a trend line support there, it's like the COVID crash, and that's where market took support here. That would be a very low risk entry for you. Very low risk, right? But you have to keep your trend lines in place, right? Then you have another trend line going for 6 years in a row, like, and you have 1, 2, 3, 4, and you can even count some of them didn't touch exactly, but they just came nearby. That's also good. And here also. So this is a long, strong trend line for 6 years. Another trend line which is going on for 1, 2, 3, 4, 5. So you start drawing trend lines joining the lows, or you can joining the highs when you have a downward trend line. We'll show you that also. Now look at this one, short-term trend line, 1, 2, 3, 4, 5, and once it breaks, that would be the end of this particular trend in the market for the next few weeks, right? Then we have a sharp trend line. You can see that that's perpendicular, almost like 75, 80 degrees. Now once such a trend line breaks, what do? You book profits. You don't go short, you book profits in a strong trend, and then chances are it may go into a consolidation phase, right? So steep trend lines to book profits and shallow trend lines to go reverse, right? That's the most important point in this particular video. Right now look at this one. There's a strong trend line which broke in COVID, and that was 1, 2, if you mark this also, 4, 3 and 4, and that broke. As soon as that breaks, this particular black candle, that's where you are supposed to exit your position and go short in the market, and then see what happens post that, right? Because it's a 45 degree trend line, because it has worked for 4 times in a row, because it's covering 2017, 18, 19 and 20. So that means it's a 4-year. The number of touch points are good, the angle is also good, and the duration is also good, and that's why when it breaks, you take a reversal trade. Right, now let's talk about the downward sloping trend line. When you have a downward sloping, you connect the highs 1, 2, 3, 4, and similarly you can have a steep trend line or steeper one, right? Same like uptrend. Let's check some examples. Nice one, 1, 2, 3, 4, 5, and then it breaks. Now remember, one additional thing, as I can see this chart, I can tell you one more thing is, once a trend line which is working as a resistance, and if it crosses, the same trend line will work as a support, like change of support and resistance. It's called change in polarity. So resistance trend line now becomes support. That becomes actually a very low risk trade for you to enter. If you have missed the breakout, you can enter on the breakout on the support. Now another 1, 2, 3, 4 trend lines. One, just keep drawing trend lines on your charts and see the magic, how it takes support, how it takes resistance. Even after years, even after months, it will give you supports and resistance. Now this one is a sharp or a steep trend line where you can see after this, it consolidates. So in the uptrend, we said that after a steep trend line break, you're going to book your profits. You're not going to go reverse. In the same way, if you're short in this trend, you book your profits and stay sideways because it goes into consolidation, right? So this are the simple trend lines. It's so powerful. You just learn about it, read about it, and it's very, very basic. Now in this Tuesday technical talk, or in this videos where we talk about some basics like candlestick, trend lines, moving averages, patterns, support, resistance, if you learn this well, you will become another level in your trading and analysis, because I know many people are behind this complex tools and techniques and very high fancy tools like something like Elliott and Gann and all that. All those are also good. I don't say that they don't work, but they are that takes time. That takes some years to master it. But these are all very basic tools, and this is your foundation for technical analysis. If you learn this well, I don't even think you need to go and learn those things, because these are the things which are easy and then can be implemented, and really you can make money out of it. You can see a simple trend line break. Tata Motors, which is a strong downtrending trend in the last few years, broke out after COVID, and look at the move which it produced with a simple trend line from 2017, 18, 19 and 20, right? So this video explains you about trend lines. I hope you learned a lot. If you like something about this particular video, make sure you put some comments below. And what did you like? What did you learn? What was a new aha moment for you? And I'll see you in the next episode. Thank you so much. Good luck and good trading.